What is it good for? Absolutely nothing except oil. It ain't you all, it's y'all. Y'all. You sound like a dang you sound like a dang karate movie. Oh boy. Alright, we ready? Let's go. Hey everyone, welcome back to Metals and Momentum. My name is Anthony, and in this video, we're going to go over a very interesting trade that I am currently in. Probably going to take a little bit of time to play out, but I'm looking at some of the stocks that are related to uranium, and I'm thinking to myself like, man, this looks like oil back in like early 2025. Now, if you're a Metals and Momentum subscriber, we actually were trading oil early 2025. I was projecting a 20% move to the upside. I did not see a 100% move to the upside. I think it was actually more than 100% move to the upside. I didn't call for that, but I was definitely trading for a 20% move, and we managed to capture about 12% of that upside there. And I'm looking at this investment that we're going to go over in this video, and I'm thinking, I didn't see the 100% move in oil coming, but in this stock right here, I could see a 90% move to the upside. And we're going to go over it in this video. So if you're new around here, I write Substack articles over there, and you can actually subscribe to my newsletter. We put out a bi-weekly report. This is my last bi-weekly report that we just put out. And then we sometimes will send out the investment thought of the week separately. In this situation, we did. So we were writing about investment grade jewelry. If you're interested in how to go about owning physical gold in terms of like a jewelry form. If you watch my videos, you've seen that I definitely am a fan of holding physical gold and also physical gold in terms of like in jewelry form. So this is very, very interesting. The article is, I think, really well written, biased opinion here, but we talk about where to get investment grade jewelry in the article down below. Monet.com, it's no secret to some people who are investing in gold jewelry. And you can actually see the price performance in the article as well. So I'll link this down below. I bought this in 2021, and Monet will actually track your performance of physical gold that you purchased through them, which is very, very interesting. So you can see my performance on these two pieces right here, and we'll talk about it in the article. If you're interested in there, hit the link down below. But it's not a paid, this is not like a paid thing. I don't have anything to do with Monet. I just really like the product, and I think owning physical gold during these times, very, very important. Not a lot of people want to own bullion because it's boring, and I get it. So if you could think about owning physical gold in a way that actually is enjoyable, then I think that's a smart thing to do, you know? And that's what I've done with my own money there. So really good performance on physical jewelry, which is quite hard to do. And, you know, we'll talk about it more in the article there. So let's get into this bi-weekly report. I titled this, Uranium Looks Like the Next Oil. If you're looking for the bi-weekly report, again, down in the description there, you could read the full thing. If you're a paid subscriber, $9 a month, you can join us on the paid tier, and you can get full access to the bi-weekly reports where we talk much more in much more detail about a number of different stocks, not just the ones that I'm going to mention in this video here. So a couple key interesting things. Let's go over the trade and investment recap. I did add to a swing trade, and if you're part of the paid tier, you could review this trade right here. We're actually the stock is essentially at the same level as where I bought in earlier in the week. You could review that trade recap right there. But this one I am opening up to free subscribers because the opportunity is so interesting. And also we have new free subscribers on my Substack. So I want to give them an idea of what we do in the paid tier. Every once in a while, I might open up a trade to the free tier. And you'll see it first in the newsletter that I send out on a bi-weekly basis. So We will definitely go over SRUUF, but first, I want to talk about the S&P 500. This is a thing of beauty. Like we've been talking about the decline in the S&P 500 for the last couple months here. Once we were closer to 7,000 on the S&P, I was saying major warning signal to all subscribers. If you're invested in the S&P 500, consider taking profits. What I'm seeing on the chart is I think what's going to happen is that we're going to come back and touch this third support line. And by the time we reach there, that 200-day moving average is probably going to meet the third support line. And then we'll have a small little bounce off of that. Something like maybe like this, and then potentially move back down lower to that third support line. What's really interesting, if you look at the chart, this is pretty crazy. I love when this stuff happens. And we've documented it well throughout the channel here. I was saying 7,000 on the S&P 500. There's that third support line. There's the 200-day moving average, the blue line right here. It's creeped up, reached the third support line. We just touched, or we're about to touch that blue 200-day moving average right there. That's probably going to signal a near-term bounce on the S&P 500. Unless, we just get like a crazy announcement of like private capital that is just like absolutely failing and taking down a number of the banks. That is currently happening right now, but so far the market has remained somewhat tame. But it's always great to see when these chart patterns play out. In the near term, like I said, we'll probably have that little bounce, retest that second support, and then start maybe going lower. Here's kind of iffy. Like we've had a 7%. What is this? Let me just measure this out to make sure I'm giving you the right information. So I think it's 5.4% decline from the peak to where we're closed on Friday. I'm recording this on Saturday, March 14th. So we've had a little bit of a decline here, which is nice. You need a little bit of a breather. A lot of the big tech stocks, the crazy PE multiples, like those have come down dramatically. We were noticing that there was a shift in markets from like the crazy tech stocks that were just like absolutely insane in terms of the multiples. The market is actually moved over to blue chip stocks, and we were documenting that movement in the last I think it was like 2 weeks, last 2 weeks in the biweekly report or something like that. In a previous biweekly report, we were documenting that. So very, very interesting to see. A lot of those tech stocks, a lot of the crazy, COVID stocks, they're down like 80, 60, 50% from the all-time highs. I think we're probably going slightly lower. And what does that mean for the S&P 500? Hard to say from this point of view. Like I said, near-term bounce, probably for sure. I think that's definitely going to happen. Do we break the 200-day moving average? That's the point where I'm like, okay, if we break that 200-day moving average, things are going to start to get interesting because really, like, there's not a clear support line. Like maybe you could see like a small bounce like right here at 63.46, somewhere around there. But the next key area of support to watch on the S&P 500 is this high from 2025. So this support line and this point right here, 61.28. This is where I would start to get pretty bullish, and I would see if we broke down there, and especially if we got there like quickly, this could be a moment where, Donald Trump starts to step in and says, hey, we can't have this happen before midterm elections. Like, we need to boost the economy, maybe even send out tariff relief checks. And a lot of that money is going to flow into the S&P 500 and just into assets as a whole. So we would see gold pop. We would probably see silver pop a little bit off of that announcement there. And the S&P 500 would also go slightly upward as well. Whether we go back to all-time highs or not, don't know. We'll have to see it play out on the chart. But right now, the risk to the S&P 500 in the somewhat long term, like couple months, but still to the downside, Or we could just get some sideways chop. I was aiming for that third support, and we're here. So I'm not 100% sure on what's going to happen. We're going to watch the chart as it plays out. But a break of the 200-day moving average would signal we're going lower on there. So very interesting. Love when we have that fully documented. I'm going to make sure that we're on the right track here. I think gold is the next chart that we're looking at. Yeah, so something happened in gold for sure. Now, I don't trade around physical gold. I pretty much just buy it and I monitor the chart, but like for the most part, I'm not looking to trade every single move in physical gold. Now, one thing I was looking at and definitely projected was we have a bear flag formed on the physical gold chart. But inside that bear flag, we also have another bear flag right here. So that to me, near term, definitely told us that, we're going lower on the price of physical gold. Am I selling my physical gold right now? Absolutely not. Because really the downside here is not that dramatic. Like for example, from here to here, like it's a 6.5% move. And that would still mean that the uptrend is still very much well intact. Like for example, we have this trend line right here. This began and started to play out in August 2025. So all the way from there, we've just been in like this straight upward movement, a retrace down to the support line, no big deal. Even if we were to get a break of this support line, like let's say, for example, we go something like this and then break down lower and head back down towards this support line that's 43.62. We're talking American dollars here, by the way. Then I'd still say, uptrend still very much intact for physical gold, but the risk here is about a 16% drop from, that recent high. That's 16% from that channel there. So kind of watching the chart, but just preparing myself mentally to deal with that potential. Not really doing anything about it, but I would be making a move at 43.62 if we get there. Definitely gonna make a purchase of some physical gold around that price point there. And whether you do that in physical gold jewelry or bullion, that's up to you. I own both, so I'm just going to be a buyer in some form of a way there. 43.62. I will look to either buy physical gold or maybe even jump into some of the miners, because by that time, if we see a 16% decline in the price of physical gold, the gold miners are absolutely going to be shredded, and a lot of people are very bearish on the gold miners right now, and they're not. People don't think that the price of physical gold is going to stay this high. Same with physical silver. I'm very interested in some of the silver miners. Haven't gotten into them yet because I think there's some downside on physical silver. I think that is the next chart that we're going to go over here. Yeah, why don't we just talk about that? Because the miners people are definitely predicting that the price of physical gold and price of physical silver is not going to stay this high, whereas I do not think that's the case. I don't think that's the case. I think we're going to trade in a range here. I don't think we're going back to like $35 silver. I actually think we're probably going to be in this range from $54 up until $100, like somewhere around here. We're probably going to be there for quite some time. And in that scenario, if that plays out, then the gold miners and the silver miners are going to be a great buy, even if we trade in this range, like from like here to here, 43.62. A lot of the gold miners, like they're making profits at like $1,200 per ounce, $1,600 per ounce. So the margins on these stocks are just going to be absolutely nuts. More insane on silver, that's for sure. But same thing is playing out with physical silver as physical gold. We were calling the top around 119. I actually exited silver at about $93 to $96 US. I sold my physical silver right around there. And then what we've seen play out, Again, just like physical gold, you have that bear flag. This time in physical silver, we've seen the breakdown, but not really like confirmation on that breakdown. So this could pull back upward next week. We'll see how it plays out. But ultimately, I think we're going to go back down to $71. There's a clear support line right there. That's where we actually stopped. And even look at this long wick. This in one single day, we were up here and down here. This is pretty insane. So 63.92 was the low of that day, and then we moved back up closer to $71 there, actually above $71 on the day there. So very clear support at 71, but I still think 54 is the key support. Anywhere between 71 and 54, I'm going to start to nibble on some of these silver miners. We'll get to that later on down the road. Let's go over the major, the title of this video. This is the reason why I was looking at some of the uranium stocks. And I've been accumulating some of the uranium stocks for a little bit of time here. It's been a couple of weeks now that we've started to move into SRUUF and another uranium stock as well. So if you're on the page here, you can see exactly what I'm doing through trade notifications, right? So let's go over to SRUUF. Now, this is in American dollars. And if you're looking to get into the stock and you're trading in Canadian dollars, they have UU is the Canadian ticker. This is the Sprott Physical Uranium Trust. So that what they're doing is essentially stacking physical uranium, and you can get access to the price change via the Physical Uranium Trust. Gold is kind of like the same thing. Like you can buy the physical metal and store it yourself, but not so much with uranium, right? Whereas Sprott will buy and actually house that uranium themselves, and then you can get access to that via SRUUF or U.U. So very, very interesting chart. And I'll break down this. This is a lot to look at, but I'll break this down and make this simple. So first thing I noticed is this massive cup pattern playing out right here. What's really crazy is like cup patterns are very bullish, meaning that we're expecting the price to go up over time. And we got a little bit extended right back here, but this cup pattern is still in the cards for sure. And we're seeing a breakdown right here, but this cup is actually supported by this 200-day moving average. But the other thing that makes this chart so interesting, one, you don't really see cup and handle patterns. Like, it's not like super common, they're out there, but it's not super common. But what you don't see is cup and handle patterns with inverse head and shoulder patterns within them. So here is the shoulder, the head, there's another shoulder right here. Inverse head and shoulder patterns are very bullish, meaning that, you could actually chart out the next upside target using the head and shoulder, or the inverse head and shoulder pattern, but also the cup pattern also allows you to price out where that next target is. And these are both aligning all in one single chart. You have a cup pattern right here and the inverse head and shoulder pattern right here. Very interesting. You don't see that too often. That is for sure. So this is what makes this trade so interesting. And I'll break down why I have these price targets. My third price target is all the way up at 37. Let's just call it $37. Like that's pretty insane. We are trading right now at we're trading at 1978 as of the close on Friday there. So I'll break down this chart a little bit further because this trade setup is just so interesting. So first thing, we have the cup pattern, and you can actually get a price target, an exact price target on the cup pattern by going like this. You essentially take the top, or I guess like the bottom of the cup, and you're taking a measurement tool. You're going all the way to the top of this cup, like we can call this like the lid, right? You're taking the measurement all the way up there, and you're moving this to the very top of the lid of the cup. Let's move it right there. that takes you to my third price target right here. That's just the cup, right? Now that's a crazy move. That's like, I think it's 90% to the upside from where we are here today. This is why I wanted to call this out on like the free tier, because like the upside is pretty nuts. So that's 90% upside. But like I said, you can measure out the price target using the head and shoulders pattern as well. And that actually takes you to the second target. All you would have to do is, you first have to identify the head and shoulders pattern. It's actually this right here. So what you would do is take a measurement tool, is it this one? Yeah, sorry. This one here, we take the top of the head and shoulders pattern to the very base. Did I get the top here to the base? And we're essentially moving this up here. And that takes you to the second target of 2845. That's really crazy, because from where we're at right now, let's just zoom in. That is 43% to the upside here. But also the cup has to play out, how the cup would actually end up playing out. And I'm just going to get rid of some of my lines here so we can try and clean this up. How the cup would have to play out is we would have to see this rise up to like the lid of the cup. And then what would generally play out is some sort of like flag pattern. So this would be called a handle. So you'd get some sort of like sideways chop right here. And eventually there'd be the breakout of the handle. That would be the cup and handle pattern playing out. But what's really interesting is from where we're at to the top of the cup, like the lid, I've been calling it, this is 27% to the upside. That's crazy. So what I was thinking about is like, what is the downside, right? So from the downside from here, how we would know we would have to exit is by going, we would have to break not only the head and shoulders pattern, which it has actually broken, but we'd have to break the cup pattern. And also what you can notice is the 200-day moving average. This is the blue line here. This is trading alongside the wall of the cup, if you want to call it that, right? Which is super interesting. So both of these levels would have to break. There's also a key support line at 1892. So we'd have to break 1, 2, 3 areas of support before we would know that, this is like, we need to exit the trade. And this whole thing is just getting like thrown out the window, right? So we would have to break 3 areas of support. That's 6.8% to the downside. And that would signal that we have to cut the loss, right? But think about that. That's 6% downside versus about 30% to like our first target. The top of this cup, we've been calling this the lid. And then the second target is like, let's just measure that. That was 43% to the upside, 6% downside versus 43% of the upside. I like those odds. But that's not it, right? Like we have a third target of 90% to the upside. That is unbelievable. I was looking at this chart and I'm going, This actually looks like almost even like oil did back in early 2025, because what oil did is it actually created a wedge pattern before the breakout. Let me get a clear line here. So oil did the same thing. We had a wedge pattern form just like this. Then we saw the breakout, which is actually happening right now on SRUUF. And I'll even go over just to the oil chart to show you what we were monitoring early 2025. I identified that wedge pattern that was created right here. We got the breakout right in here. And then we moved 100% to the upside. The same thing is looking like it's going to play out, except this time I'm actually projecting 90% to the upside. I didn't think we would go 100% to the upside on oil. But if this whole pattern, the cup and handle pattern, the head and shoulders pattern, if it all plays out, that's max 90% to the upside. And that wedge has actually been broken right now. So if we get a pop in the coming weeks, that brings that inverse head and shoulders back into play. And also it just signals that the cup is going to carry on playing out, and all of our price targets could start to get hit somewhat quickly. I think what would actually probably happen here is if we were hoping for that max 90% move to the upside, I think the war in Iran would have to come to an end. I think that would signal, that would definitely bring more confidence back into the market. It would move the S&P 500 to the upside probably pretty dramatically. And what I've noticed is that SRUUF and the S&P 500 are definitely correlated. If there were news of the war in Iran ending, then I think it would send SRUUF up dramatically, not immediately 90% to the upside, but over a span of time, then I think that that full max upside could play out. And I think that's what would probably need to happen for that max upside. But I would be taking profits all along the way. Like, for example, I would take profits even at the lid, the top of this cup, and then I would, as that the handle starts to play out, you start to get that sideways chop, I might consider buying on the breakout, and then looking to take profits around my second target. I would even start to take profits around here. And then, of course, maybe that last small little tranche that I have left, I'd be hoping for max 90% upside on that. And then I would take profits around there. But that trade setup is amazing. It looks so good. Of course, the S&P 500 has to play along. For example, we can't have a 60% drop or a 30% drop, in the S&P 500 and expect SRUUF to go 90% to the upside. So some risk definitely in this. It's not a risk-free trade, but I'm looking at this and going, holy smokes, this could be big. And I wanted to document it here on the free section. So that way, our free subscribers get an idea of what we do on the paid tier of Metals and Momentum. So if you're interested, hop over to Substack. The link's in the description. Metals and Momentum is me. You're looking for the investment thought of the week. That's investment grade jewelry. There's the article linked down below. And then the bi-weekly report, uranium looks like the next oil. That is there. So I'm going to carry on this video for paid subscribers because we have a lot to go over in the paid tier of Metals and Momentum. I do want to call attention to the Cash Collector Wealth Protector webinar. This is going to happen on the 26th of this month. I think I said at 7 p.m. Check the link here for more information. This article, I guess I'll just link this one in the description as well. This is a free online webinar that I'm putting on. And we're going to go over a number of different things, how to get started in swing trading and things like that. If you're confused by the charts, if you're confused as to why gold is so important during these times, we're going to go over that. We'll go over a number of different things in the webinar there. The whole information is linked in the description of this video. Let's carry on this video though for the paid subscribers and carry on with the charts because I have a number of different charts that we're going to go over there. But for my free subscribers, thanks so much for watching, and we'll see you in the next one.